out enjoying himself in Hawaii this week, but please be joined by Yashu from Hit That Bid. Yashu, how are you doing?
Hey Matt, doing well. Thanks for the invite. It was an easy decision for me to want to come in into Emmett's shoes. Not an easy role to fill, but appreciate you inviting me on.
Well, we always have good conversations when we get together, whether it's on your channel or here. So definitely
Yeah,
looking forward to it. Although I am kind of bummed because I bought some juju just for this purpose, and I kind of forgot to grab it. Now it's a little too late. It's downstairs.
I look. It
So
happens. It's really easy to happen. It's happened to me multiple times. Today I don't have it cut, but I have it with me because I'm having coffee. But
was that a
yeah,
lemon?
it, no, it's just an overripe orange that with
Oh,
my
okay.
with my floodlights here, it looks like a lemon. Yes,
Just very kind of washed out in that lighting.
not a good sign.
Well, hey, we've got a lot to get into this week. So let's just dive right into it. So normally we kind of start off with the macro news. We've seen equity markets kind of slide the last week or so after rallying pretty hard the last month and a half. Have you been kind of surprised by the kind of slowdown that we've seen, and maybe just by like one kind of anecdote I thought was kind of interesting? You said you've reused the same thumbnail. Was it 3 weeks in a row of the Tesla crossing 900, maybe?
Yes.
Just
Yeah. No, yeah, it's funny because it's like every Friday I'm scrambling to set up my stream a couple hours ahead of time so people can just get the word out that of course I'll be going live on Friday at 12. And yeah, the last 3 Fridays I've been able to use the exact same thumbnail. It's me, it's Elon, and it's Tesla 900 question mark. And it's funny because I think one of those weeks we were coming down, we're over 900, we're coming down. Last week was we were potentially coming up to 900. So yeah, it's kind of been a nothing burger couple of weeks here. It's kind of the dog days of summer, so volumes have been a little bit lower. But to your point about the retracement, am I surprised? Maybe not. I mean, we were at a pretty heavy technical level on the S&P 500. Hitting the 200-day, rejecting pretty much right off of it. Jackson Hole's coming up, the symposium this week. I think this Friday it starts, or that's when Powell talks at least. So, there are some macro stuff. There is some macro stuff going on amidst the split, of course, which, how can we forget about that?
Yeah, which I think happens tomorrow, but it won't show up in the share price until trading on Thursday. So
Yeah.
definitely looking forward to that. I'll have to update my model to divide everything by 3 again. So that'll be we're gonna have to kind of get used to that. You'll definitely need a new
Yeah.
thumbnail this Friday, I think, right?
I mean, never say never. Yeah.
You
Yeah.
think we might 3x in the next couple days here?
Yeah. No. I'll definitely have to spend some time redoing some of my thumbnails.
So yeah, I'm kind of curious. Em and I have been talking the last several weeks on this live stream about kind of our view of macro, and I think Emmett is he's got this 70% probability that he's been ascribing to kind of the soft landing, where he thinks the economy is relatively strong. And we've just turned the corner on inflation, and so the future prints we're seeing should come down a little bit, which should remove a little bit of the pressure from the Fed to kind of keep raising rates, and potentially could even result in things turning around a little bit. I'm a little bit less optimistic than Emmett on that front, but I do still think that it's a reasonable and probably increasingly likely possibility, though I'd probably put it under 50%. I'm curious, where do you as you're thinking about the kind of threading this needle of like the most optimal outcome for for equities and for the economy as a whole, what kind of probability would you place on that good outcome, and maybe what other outcomes are you kind of weighing as like potential scenarios that we could see going forward?
Yeah, I would say I'm probably closer to Emmett. I am a little bit more
Oh, interesting.
optimistic about the soft landing because I think sometimes it's tough. When I think about all this stuff, I often have to remind myself like everything is relative. So, and I see some comments here about Europe as well. Like everything is relative. So and we're going to get into the gas pipeline potential maintenance going on and
Yeah.
shutdowns. Like that would be terrible, but everything is relative. So when I look at the U.S. economy, yes, I mean we're in a recession, whether Biden admits it or not. We'll probably continue to be in a recession past this GDP print, is my guess. But if you look at the relative world markets, I think with the Europe uncertainty and the Taiwan risk potentially, that's kind of a wild card. I don't even want to talk about it because that's how much I don't even want to consider that an option right now. I think the US still stands as a really strong macroeconomic environment relative to the other markets. So when you look at, and there's a lot to be read into Jay Powell's speech at Jackson Hole. He has an opportunity to kind of reset, I think, the overall narrative with, okay, we are in a recession. We are going to see some downturn in employment, but that's okay because we're focused on inflation. To date, he's kind of been like he's trying to serve two masters, which is kind of the Fed's prerogative for sure. But
Mhm.
he's in the face of data, he's been hard pressed to say like, look, we're gonna hit a hard recession, and I think we haven't hit a hard recession by any means. A technical recession, yes, but a lot of people are thinking if inflation is coming down, which potentially has topped in July, let's say CPI has, then
Mhm.
we're kind of in this boat where, yes, I mean, raise rates 75 basis points in September, raise them up until the end of the year, a small one maybe in December as well. But after that point, I mean, if inflation comes back down, the economy is weakening. How does the Fed continue to raise rates past, let's say, another one, three? I think 3.75 is a projected Fed funds rate to end the year, something like that. So
Mhm.
that's really the question the market has: is like, does Jay Powell reset the narrative a little bit? And stop trying to like play two sides at once. Just kind of stick to one and say, look, I don't care what happens with the economy, but inflation has to come down. And I think that's the right move. Probably is to sacrifice the economy in the short term for inflation to come down. And inflation is already coming down, I think. So,
Yeah.
and you talk about derivatives. Inflation is a derivative metric. So for inflation to continue to be this high, or even rise, some people are saying it's going to go up. Well, we would have to see an acceleration in the inflation, or it's acceleration in the rate of change of inflation. So it's a second derivative. So I'm
Right.
not I'm not thinking that's happening.
So you're not thinking that there's um, an acceleration on the second derivative. So like the month over month change, for example. I mean, given the probabilities that you're ascribing, it sounds like you're saying you think that that's going to either continue to stay flat, or to even potentially come down a little bit. Is that a fair interpretation?
CPI
Yeah.
or the derivative? Oh yeah, CPI.
Well, the derivative. So, like, obviously, the year-over-year numbers are going to continue to be quite high, but the month-over-month, I think, is probably the more important metric. And
Hmm.
granted, there can be some seasonality, and there can be some items that kind of impact that. But kind of seeing that second derivative, at least flatten, and
Yeah.
not be kind of a steep upward trajectory, I think is the sign that we really need in order for the Fed to kind of change course on these rate hikes in the next, call it, 6 to 12 months. Um,
Yeah, and but really, like the way I look at it is the question is if the economy continues to deteriorate, and I just checked the Atlanta Fed GDP now estimate, it's coming down. It's I think a little bit over 1% at the moment. If that continues to come down, we're in a technical recession at that point. Labor market's weakening. Inflation is a lot of this inflation, and the problem with today is the inflation is not necessarily demand oriented. It's not
mhm.
because there is demand, of course, but it's not because in past demand is so high. That's why everyone's buying everything. That's why we're seeing inflation so high. A lot of this is supply oriented. Of course, we know this, right? With the shutdowns and all the variants going around even 6 months ago, let's say. The problem
Mhm.
is, how do you fix that by increasing rates? I mean, you're fighting a fire with like a water bottle, right? Like
Yeah.
it's the wrong approach, but I get it because uh, that's kind of the tool that the Fed has. Like
Right.
talk about monetary policy. That's really all that they got. Yes, you can of course lower their balance sheet, and they're going to cut some off and let their bonds and stuff mature and have a drop off there in the balance sheet for sure, which is to come in probably towards the end of the year, I think. But as we see, like the Fed's trying their best, and every other day, every other week, there's like seemingly a new headline with this place in China being locked down or that place, and it's like I'm
Yeah.
not sure how much fire there is to that smoke even, but it's interesting to see how much power is now really not in the Fed's hands. They just have
Yeah.
to be reactive to everything.
Yeah, and we saw that earlier this year with the supply chain issues. Like, the Fed doesn't really have a tool to fix supply chain convexity, right? So I think you've got a similar situation now where you've got the geopolitical issues, like you were talking about. Obviously, shutdowns and in China, but inflation is remaining persistent in Europe, and I think in particular when we start getting into the colder months in Europe, and you've got Russian natural gas supply and potential cutoffs, that could be a potential significant inflation factor for at least that pocket of the world. And even in July, I was looking at some of the rates recently. UK had 10.1% inflation in July. Germany was at 8.5%. Some of the Baltic regions were a little bit higher. Estonia was at 22.7%. And energy is clearly leading the way in Europe. I mean, Europe's got like a very significant energy and in particular power market situation going on right now. I was looking at some research recently that said that Europe's or Germany in particular, their kind of wholesale power prices are about 15 times the average right now. It's a combination of some pretty bad policy mistakes, shutting down nuclear with increasing intermittent renewables, and then Russian gas price spikes and all that issue. So what's your kind of take? Obviously, we're in North America. We've got we're somewhat isolated from a lot of these geopolitical issues, but Tesla is becoming increasingly kind of multinational corporation with operations and sales worldwide, and so they're certainly prone somewhat to these issues. So to what extent are you concerned about you mentioned Taiwan and the issues that we're seeing in Europe? I mean, could those have the potential to derail the macro recovery that we're starting to see here in North America?
Oh, for sure. Yeah. I mean, that goes beyond Tesla, corporates, like it goes beyond so many things, capitalist related, even that it's just tough to gauge. Like same thing with Ukraine and the invasion there. It's definitely a risk. I mean, we saw with Pelosi how when Pelosi traveled to Taiwan a couple of weeks back, how skittish the markets got around that, and how headline. I'm not sure how much to believe, like all the headline, warmongering headlines that came out that week. Like, I'm not sure how much of that is just media pumping it up versus like big money really being scared of even poking that bear. It's definitely it's a hot topic, and I think with the invasion of Ukraine, of course, like it's on everyone's mind. China's made it clear with their policy on Taiwan and what they want in the long run, and so. Or the Chinese government at least. So it's something to consider. I'm not sure. Like 2022 has really put in, like these are things we often like talked about for years and years in the markets as somewhat like not Ukraine and Taiwan specifically, but like geopolitical risks at this level were things that you kind of didn't really model for, right? It's not like you're doing your DCF and you're considering all of these geopolitical risks coming in. But 2022 has really just flipped that upside down, where it's like, do you have, like in your equity investing, of course you can discount to heavier or lower at the end of it, kind of for a fudge metric, but it's hard. I'd be curious to hear your thoughts on Taiwan. I mean, I don't really know, semis are there, but I don't really know too much outside of that, to be honest.
Yeah, I mean, it's funny you mentioned like modeling this. I mean, I remember when I was doing valuation professionally, we would look at if a particular investment was in, say, like Venezuela, then you would like add a country specific risk. But I think we're at this point, like over a decade after that, where like there's so much interconnectedness that you like just simply applying a country specific discount rate doesn't work when supply chains are so intertwined and the political fallout is so intermingled among different countries that it kind of impacts every country and it impacts the equity markets overall. With Taiwan in particular, I'd say I'm less concerned with like the potential for semiconductor shortages. Of course, that'd be an issue, but I would be more concerned with the escalation risk and does the U.S. take a hard line that provokes or at least threatens a war with China? If that happens, oh my gosh, I mean that would be horrible news for just the world. And equities obviously would kind of get smoked in that scenario. But I think even if it kind of falls short of like armed conflict, I think that kind of increased tensions could cause pressure, and you could see some sort of tariffs or a trade war breakout, which could adversely impact Tesla, with their operations in China. So it's very, but it's very unclear how a scenario like that would pan out. So it's just like the market would freak out because it's unknown. I keep thinking back to the war in Russia. I mean, when Russia finally actually invaded Ukraine, the market was like, oh, at least we know what's going on, and the market rallied for a couple of days after the actual invasion, which is kind of crazy when you think about it. But I think the uncertainty is more scary for markets than the actual risk itself. So that's what I'd be worried about. I mean, you could see an incredibly steep sell-off in a very short amount of time if we did see some kind of major situation break out with Taiwan. So kind of hoping that doesn't happen, but wouldn't surprise me if we do see that kind of big sell-off.
For sure, yeah. China's a different beast altogether when you talk about potentially being at odds with China. Just completely different than the Russian government. It's definitely a geopolitical risk to consider. I mean, 2022 is the year of the geopolitical risk. Like it's everything. And I see a lot of comments here about people thinking that China is planning something, CCP. I mean, who's to know what's going to happen here? But I think the bigger thing here is and it sounds so cliche and sounds so trite, right? But it's like we're like, okay, we just all get along here, boys and girls. Like it's just terrible to see past the stock market stuff that we've seen this year. All across the world. So I'm just hoping for better days ahead there.
Yeah, for sure. I mean, we're all humans, and it almost feels trite to focus on the equity impact of these things when there's such a human tragedy unfolding right now in Ukraine, and potentially could be in other areas of the world as well. Yeah. But let's move on to happier topics. Tesla rolled out FSD. We're calling it Beta 10.69 this past week. Have you seen some of the videos so far? Curious kind of what your reaction has been.
I'm really excited to hear your reaction on the other side of this. I have seen videos. I've seen Omar's. I've seen Chuck's unprotected lefts. I was out for the weekend. I was on vacation at a friend's wedding. So I didn't really dive too much into the sentiment around this update. I saw some of Chuck's videos going viral though, and I had to watch those. It's it's hard because I don't want to just say, look, this update is so good because it can now do this one specific turn on this one specific street really well. But some of the stuff you look at with the creeping that's happening now, that was one of the big issues that you watch the old videos and just was awkward. It would fully stop. It's just gotten so human so fast. And I think this is the first step, right, towards the single stack architecture. So it's really amazing to see the progress that's happening. It's hard to measure, though. I wish, it's very anecdotal. I don't like to really harp on just anecdotal, data points with FSD. I would love for Tesla to come out and give objective metrics they look at to see if an update is better or worse than the last one. But man, the videos, if you haven't seen them already, go watch them. It's nuts. and that was what FSD Beta's not even been around for that long. It's FSD Beta a couple years, let's say, and the rate of change that has happened with FSD is just insane. Have you tried it? Have you got the update?
No, so I don't have the update yet. So I'm still on the last version. I'm guessing I'll get it in the next week or so. So I got the original beta back in October of last year. So it was kind of in one of the earlier waves of people that got it. But similar to what you're saying, I've just been, kind of blown away by what it was doing. And one of the things that I really liked is that it shows on that kind of blue shaded region where it's trying to creep to. Because that was something that always gave me, the heebie-jeebies a little bit. Was there's a busy road, I'm trying to turn left, and it just starts going, and I'm I don't know if you're creeping or if you're just going to keep going. So if I had some greater degree of confidence that it was actually going to stop at a certain point, I'd be much more inclined to kind of let it go instead of right now I kind of intervene a lot more than I'd like, just to you want to be more safe. So I think it's that kind of user experience part of it is really impressive too. How it's just showing you a better view of what it's trying to do, to give you more confidence that, all right, it understands that it's not safe, but it's going to creep up to this point, and then once it's clear, it's going to get to this median and kind of wait to turn there. But Chuck's video, like, oh my gosh, it was so impressive. But I think it's a fair, like, I try to be reasonable. I don't want to be like an FSD, maximalist.
Right.
Even though I think it has the potential, like, to fully be warranted that you could be a maximalist. But like the question in my mind though is, do they need to like send a team of engineers to like handle edge cases like this, or can improvements like this be made just with kind of the more standardized processes that they'd have? Because like after they devoted like a month's worth of time and like they had beta testers out on Chuck's like specific turn that he was doing, like that's not a scalable solution. So yeah, I'd be curious to see. But like I was watching Dirty Tesla, who's another beta tester from Michigan. He did a drive through downtown Ann Arbor, which was really impressive. And he was saying a lot of the issues that he was consistently seeing were kind of fixed in this iteration, this latest build. So it does seem that sure they may have spent a lot of time working on this one particular incredibly difficult turn, but it does seem that there's a lot of kind of like ancillary benefits and things that are benefiting. Did you have a chance to see Ashok Elaswami's the autopilot leaders? He had this occupancy network presentation where he's kind of talking about a lot of the changes that went into this build. Did you have a chance to look at that?
I read his Twitter tweet thread, but I'd be lying to you if I said that I even remotely understood what he was talking about. I'm not smart enough for that.
Yeah, well, it was incredibly technical, so a lot of it certainly went over my head as well. But when he had a lot of these great videos in there that kind of showed what he actually was talking about in the presentation itself, and that was one of the things that was really impressive to me was a lot of like the inference. So, for example, like a car that was occluded in the minute, maybe there's like a parked car or something like that. So like the car actually can't see it, but it knows that it's there, and it's like they're really improving kind of like the memory tracking of things. And so he was explaining how this all worked so well, and it was getting pushed to this latest build. And then like it was seeing it in person. Homar's blog had like a great instance where there was a car that was like visible for just a second, and it was going to turn in front of him, but he didn't see it, but the car did. And even though it was occluded, it like knew to stop or at least to slow down so this car could turn. And it was like, okay, like you're seeing like the theory match the results now, which is such an impressive thing. I think we've been for a long time hearing about like all the things that it would do, and like all the great AI progress that was going into it. But then like you get these actual results, and the car would just be glitchy, or it would make like mistakes. And I think this is the first build where I'm actually seeing like, okay, like there's very serious like performance improvements where it's seeing things and representing them in a much more realistic manner.
The interesting philosophical question I have sometimes with the FSD stuff is, okay, you're in the car, you're FSD beta testing it, and you intervene because you don't think the car was going to stop, right? How many times does the car just pretty much want to say to you, oh, Matt, like you should just let me go. Like I knew what I was doing. Yes, I was accelerating too fast, but that's what happens. Like with an electric car, like don't worry, I was going to stop. I wonder how much progress is, potentially delayed because of human intervention, which is totally warranted, by the way. Like, I think you should rather be safer than sorry. But this leads me to my next kind of point. Maybe Tesla should create like this, like mini modeled out like city in one of their factory like areas where they can model out like little roads, like maybe just like have a bunch of roundabouts, some street lights, and just like put 15, 20 of their cars in this like small little area, enable them all for FSD beta without anyone sitting in it, and give them all destinations to go at once to see what happens with the interaction between all of them. Something like a little model, like, and this is probably like really stupid to even talk about, considering there's like real world data of this happening already. But I'd just be curious to see if there's no human intervention whatsoever, and everyone likes to say, well, with FSD beta, if it wasn't for the human intervening, like terrible things would have happened. I'd be curious to see model that out, what would actually happen between all the cars in that interaction.
Yeah, I kind of suspect what would happen is it would actually turn out to be way more conservative than we think. So like a lot of times when it starts creeping forward, I'm thinking it's being reckless. But I would imagine if I just let it go, it would end up, probably slamming on the brakes kind of hard to make sure that there's, no chance of a collision. And then it would wait, too long and annoy the people behind me while it, turned a little bit more like, less naturally than maybe I would have done it. So, I mean, that was one of the things that in another video that I watched from Chris was he was saying it was way more natural. So like the autopilot in the previous build was more conservative, but it was doing so in kind of like a jerky way. Like if it didn't know when exactly the right moment was to turn, the wheel would really jolt around like this. And so I think if we were to kind of run with your scenario there, I would imagine there'd be like a lot of like weird behavior, but like the cars, it would get to their destination way slower than you or I would think is a reasonable amount of time. And so I think there's this interesting juggling act where like the experience for the user has to be smooth or they won't use FSD, but it also has to be safe more so than it has to be smooth. So I think Chris was saying, who's has the latest build now, that it seems like they've kind of figured out a lot of the safe part, and now they're working on the smooth part, which I think is like a huge turning stone or like milestone if that actually is true. That like they for the most part figured out how not to crash in most situations. But now like they're just trying to figure out, okay, how can I know when it's appropriate to cross over the double yellow and to get back in a reasonable amount of time without doing like the weird like lateral jerk thing. So I don't know. Yeah. I'm very optimistic that that's where we are right now, but I got to experience it for myself, and I really can't wait.
Yeah, maybe hopefully you get it next week. One thing also that will be interesting to end this year will be Tesla potentially doing FSD Beta in the Hyperloop in Vegas and getting approval for that. I would be curious to see, maybe this has already been answered, potentially if they're going to be just having driverless cars down there. It seems simple enough. You're just kind of going straight. That'd be a first big step if FSD Beta, we're already looking at the end of this year for the target there. If potentially in Vegas, that's like, even at a small scale, that's the first area where Tesla is allowing FSD to go driverless.
I could definitely see that. And what's kind of funny is like, I could see that being like a huge catalyst for the stock price, maybe not a huge catalyst, but I could see that being like, look, like Tesla's deploying a real world, driverless network. And I could see like some investors like getting ahead of their skis and be like, oh my gosh, like look what they're solving. And it's like, no, like AI Day was like when you should have been getting excited about this, not on like, some non-scalable little pilot program that they've got in Vegas. But I agree with you. Like, I think that would be really, really great to see. And it would be a good indication because I think regulations are a legitimate risk. So if you can at least have like a pilot line or a pilot program like this where you can, start far as I was derailing my train of thought over here in the comments saying Emma's got a nice tan.
Yes, he does. Yes.
So I don't know. I'd be curious to see if that happens. What do you think? I mean, what would you put the odds on them getting approval for that this year?
I think there was an article out. I forget even what I read it, but now I forget what was in it. It sounds like they applied for approval by the end of this year. I think the real PR move is you get Tom Brady to be the first one to take a Hyperloop, right? Because we all know what happened with Tom Brady and the Hertz in October of last year. So it only makes sense for him to come in the Hyperloop.
Yeah, that'd be pretty sweet. Price increase, $15,000. What do you think? I'm seeing in the comments already Martin Muldoon is saying that he would never pay that much for it unless it was like actually a robo-taxi that's generating cash flows. I think there's maybe kind of disagreement from some folks in the community about whether that's too high or not high enough. I've seen like answers all over the board. What do you think?
I think the limiting factor here may not be Tesla. It may be law. Depending on where you live and how bullish or bearish you are on regulations allowing robotaxi one day. I think if you live in an area where you feel like your government or let's say Florida, for example, it's pretty aggressive with adopting technological adoption with like Bitcoin in Miami, for example, and stuff like that, right? Like little things that kind of signal like, hey, we want to be on the frontier of change here. I think paying for that and running the modeling, you may be waiting still years. I know Elon says by the end of this year, but extract that out. Let's say 5 more years, right? But I think 15,000 is interesting because Elon's always said, as we get closer, we're going to raise prices more and more. And right now, like in Canada, it's like 12.5. So I'm guessing it's going to be, 17 or something like that here when it comes out. And I think it's a great signal to the market that, hey, we're getting closer. We're like the take rates are already pretty low, right? I think
Right.
Tory Tesla
Yeah.
has shown that, like, take rates are not like, oh wow, there's so much, they're just so high, demand is so high, let's just price this competitively. No, take rates are already low, so them increasing prices in the face of take rates being low, I think is it's a really good signal, at least, that they
Yeah.
believe what's happening. 15,000 is quite the jump, though.
Yeah, it's
So
the
I'm
biggest
just
jump ever, I believe, because we
right.
jumped from 10 to 12, which was 2,000. It had been
Okay.
$1,000 price increases before then. So now we're at a $3,000 price increase, and over the last year, it's like a 50% increase, right?
Yeah.
So like we're getting pretty serious. I mean, 15,000 is not
Yeah.
like a small amount of money for an option. Um,
Yeah, I think at that price, you're almost saying, or that price jump, like, no one wants to be the first one to buy it at that increased price, right? I think
right.
at that type of jump, you're kind of just saying, hey, look, we're so confident, we're becoming so confident that this is going to be worth exponentially more, that we're going to price this where we think people will not want to buy this almost. So then they opt in
Yeah.
for subscription once we do solve it. And I think
Yeah.
subscription is really like the kingpin for FSD revenues moving forward, licensing maybe as well, but subscription modeling, like, some of the most important companies or best companies in the world are software subscription companies, right? So
Mhm.
I really like where this is headed, if the majority of people on robo-taxis will have to be subscription based.
Yeah, yeah. I mean, because then you got a recurring revenue model. It's a lot easier to, to like model the, the revenue sources, which analysts love. Right now, it's like a little bit of a black box, and Tesla
Yeah.
doesn't provide a lot of information to, like get an idea of how big the margin potential is.
Hmm.
One of the things that I really like to think about in the short term, though, is like you've got this fleet of roughly 3 million vehicles that is hardware 3 enabled, and you've got a price increase, and now more and more people, I think, are aware of an impending $3,000 price increase. So how many, like, of the existing fleet of 3 million,
Mm.
let's say like 2.5 maybe, are not don't have FSD already. I don't know if those are the right metrics, but like roughly,
Yeah.
do 2% of those opt for an upgrade before September 5th, when the price increases? How
Right.
much of an impetus is the significant price increases? How does that pan into decisions for that existing fleet? Because that's in my mind more of an opportunity than like what's the take rate in Q4, in going forward, because that may be 400,000 vehicles or so. In moving the take rate around on that, 2 or 3% doesn't have nearly as much of an impact as maybe increasing the overall kind of existing fleet take rate by 1% or so. So that's
Mm.
one of the really exciting things that I like to think about, is to, like, this residual pool of vehicles that you can get margin on a second time. I
Mm.
mean, you might have had $15,000 of gross margin when you sold the car first, and then you've got another 15,000 gross margin potential when you sell FSD. It's pretty amazing.
Yeah, I mean, if you talk about, and that's really the beauty of software, right? Is like,
Yeah,
it's just mostly fixed costs, no real variable costs with every additional sold. It's and talk about Amazon and AWS and their relationship there, with Amazon's a net income, the majority of it, really, like a good chunk of it, being AWS related because of the
yeah,
margins on that side, right? And this is not even getting into like something like Dojo as a service, which probably is a little bit more akin to this.
yeah, probably.
Um,
Yeah,
but yeah, you're right. I mean, I almost feel like Tesla wants people to just wait till they solve so they can get everyone on the subscription, because I
I do
think they're gonna,
too. Yeah.
right. Like, I think that the payback period might be like 4 or 5 years, something like that. If you pay for upfront at 15K versus if you just license it out for 200. Do you think they're going to
Mhm.
increase the subscription price?
I think they will. I would like them to be a little bit more country specific about it, though. Because like
Okay.
in Europe, for example, and in China in particular, it's like they're years away probably from having like a significant increase in functionality, and like setting the autopilot team loose on improving those functionalities, the functionality in those geographies. So I don't know. I would kind of like to see like a lower price in China. Like maybe you could get the take rate up to 5% or something there. But I think like Elon is probably thinking, no, like we'll just try to keep take rate low. I really do think this is an intentional strategy where they try to keep take rate low
Mm.
so that they can collect the most amount of profit on the back end once they say, see, we solved it, and then all of a
Yeah.
sudden, like maybe like the overall take rate, like let's say again you got 2.5 million vehicles that hadn't bought it before,
Right.
maybe 20% of those decide to take it if it can actually be a robo-taxi or something like that. And like I like you start running the math on figures like that, and it's kind of like mind-boggling how much margin there
Yeah.
could be on the table if they really do solve this. So
It's huge. It's
yeah,
from a customer service perspective, even it makes sense to not want to push FSD on
yeah,
people, just like because then you're dealing with people that bought FSD when they were on the fence of buying FSD, and
yeah,
then they're going to be complaining about, look, it's still in beta, and it could very well still be in beta for a long time. And so
yeah,
I think setting the bar where it's like, hey, this is what it is. Buy it if you want, and if you want to bet on FSD coming online in your area that you can make, you can license money here. I think that's the better customer
yeah.
service perspective to go with as well.
Yeah, I think so too. Especially when you can't even like if you buy FSD even in the United States today, there's certainly no guarantee that you're going to get the beta program, in the next 2 months even. So there's a bit of a waiting game everywhere, and so I
Yeah,
think to your point, like keeping customers happy when they might not have the product that they bought, it's a reasonable thing not to push that too aggressively.
yeah,
But I think
exactly.
like one of the things I'm looking for though is when they start offering like free samples like FSD beta for every Tesla customer free for a month or something like that. That's when
Right.
I know that like they're confident and they're actually trying to push take rate, but they've never done that yet. So
Yeah.
I'm very curious to see like once they start trying to push take rate, I really can't wait to see
Mm.
the next earnings print after that.
Interesting. Well, they did give 3 months of FSD for everyone that took delivery for end of Q4, I think.
Yeah, that's
Uh,
right. I forgot about
20
that.
maybe 2020, but
2021 was it, or was it 2020? Okay.
I think it was like 2 weeks after I got my Model 3. I was like, damn, I should have, should have waited to take delivery. But no, but you're right. I mean, and I think that was just more of a test perhaps on their service to see if they can set up the subscription. That was pre-subscription even.
Yeah, right.
But you're right. I mean, I just get so excited thinking of software like the Tesla app. Maybe even in the FSD subscription, you can package in like X amount of miles of supercharging, like
Yeah.
something where you can start packaging stuff up together in a way that adds so much more
Yeah.
utility than it does today. So
In
yeah,
insurance, and then like you can actually start
insurance.
bundling in some of the Tesla energy stuff with like virtual power plant. Like there are so
Mm,
many bundling opportunities, but I think it's going to take some time for a lot of that to mature. But I get so excited about it too, because
yeah.
people like I've seen a lot of Tesla bears say like, well, like their margins are just like unsustainably high, and once they start bringing prices down, like the margins are going to compress. I'm like, that seems reasonable on the surface, but like there's so
Mm,
much more. There's so many more levers that Tesla hasn't even pulled yet that I'm so excited to see what happens in the future.
yeah.
Um, last question before we get to some audience Q&A. Credit rating. Are
Yes.
we due yet? What are your thoughts? Some Alexandra Tesla Boomer Mama has been pushing the
Yeah.
August credit rating. Any chance we still get it this month? Or are you
I
less
will admit,
optimistic?
I'm on the same boat with her. I thought August, or actually I thought July, post earning maybe a couple weeks after. So, but I definitely think, I think, do I definitely 8 days left here in August.
We're running out of time. Yeah.
Yeah, I just gotta stick with it. I just gotta ride it and commit to it. I think August still. Reading S&P and Moody's notes back in the days, I have a video out of my channel where I kind of read through everything. It's really boring, but at least the video makes it so you don't have to read it. They said they wanted to reassess when Berlin and Austin were online, and their gross margins were positive. Like the bar was really low. Tesla
Yeah.
explicitly said Giga Berlin. I think in the 10Q they said Giga Berlin's margins are positive. I think they explicitly said that.
Mhm.
Austin they didn't, but you can surmise as much.
Yeah.
So on a technicality, they could, but I'm still expecting an update, right? Like even if they don't get investment grade credit, just the rating, let's say, I'm still expecting an update to come out. It's been a while since we've
Yeah.
heard from their thoughts about this, and they did say they wanted to reassess after the factories were online. So I think yes, but I do think it's a very sleepy catalyst. Like, it's not something that I think you can put a precise date on and be like, this is the
Yeah.
date to look for. but it's something that's there. And even last time when we got the upgrade, it was like on a random, I think Friday afternoon after it was a very sleepy, nothing was happening. And then it just came out. And then I think even Saturday, we got some updated notes on Twitter that I read. So it can happen whenever, but probably on a Friday, I think.
Yeah, I like that. A sleepy catalyst. That
Yeah.
seems about right. I mean, they're kind of sleepy agencies to begin with, right? So why not have a sleepy catalyst? Well, let's get some audience Q&A for the next 20 minutes or so.
Let's do it.
All right. So first question from S4 Enju Bajaj. Sorry
That's
if I butchered that. Oh, Sanju. Okay. The four threw me off there. Would a debt crisis in China's property market impact the growth of the EV sector? Yashu, what do you think? I mean, to what extent would that be a negative catalyst?
Interesting. Honestly, I can't say I've connected those two together. I think you can connect the debt crisis with overall consumer demand and then consumer demand into EV. I think China is leading the way, will continue to lead the way unless something drastically changes with US legacy automakers and their EV technology. I don't see it. If anything, you can make a case if consumer purchasing power goes down in China, let's say, well, EVs are already cheaper to run over the long haul. Maybe that pushes more EV demand in. So I think you can make a case that it'll actually increase it.
Yeah, I kind of agree with you. Like, it's not a direct catalyst. Like, if they're depending on how deep the debt crisis went, if it was a big enough kind of macro catalyst, and GDP really declined quite sharply, and maybe there's just not enough liquid demand for EVs in China, then sure, that could impact the market. But in my mind, this is EVs are, as Gary Black puts it, a mega trend that's just not going away because it's more economical than an ICE vehicle. It's like a better driving experience. Everything about it just makes more sense. So, in my mind, I think it's like, EV is going to take a lunch of ICE vehicles. And even in like what we saw with the COVID crisis, it was kind of like an accelerator for, transitions to better technologies. So I do think if we did have some sort of major crash, I would think like ICE sales would get hit like probably 2 or 3 times harder than EV sales. And so as a, market share percentage, sure, the overall market would almost certainly shrink, but I think EVs are going to continue to grow even within that dynamic. But let's go to the next question. All right, Callie Stoker 123 on Twitter says, does Rocket Lab's vertical integration coming via acquisition give any second thoughts? Do you follow Rocket Lab, Yashu?
No, I'm going to defer to you on this.
All right, so I'll jump in on that. I mean, so I kind of get where this is coming from. So maybe for those who don't follow us closely, Rocket Lab has been on a bit of an acquisition spree in the last couple of years, buying a lot of kind of small providers within the space industry. And if you contrast that like with what Elon is doing, you could say, oh yeah, like they're getting all their growth via acquisition, and so that's not like a sustainable strategy, and they're probably overpaying. You could make all sorts of arguments about that, which I would normally agree with, honestly. But I think one of the interesting things with the aerospace industry is that it's like such a mom and pop industry, and it's like been this kind of sleepy industry over the last 50 years. I mean, it depends on how long you want to go back, but there were just a lot of I would say kind of non-competitive, mom and pop type businesses, which were making like this one particular component, and they were just kind of doing that one thing. There really hasn't ever been like a vertically integrated company in the space up until SpaceX, came in. But Rocket Lab is trying to be, I would say, even more vertically integrated than SpaceX, or maybe if not more vertically integrated, at least they're trying to provide a lot of different services, like software, flight software, and reaction wheels, and a lot of like subcomponents that go onto other launch provider systems. So I think it actually makes a lot of sense, because what they're doing, they talked about this with the Solero acquisition, where they had like, frankly, a really nice revenue base, but like single digit gross margins. And so they said, well, not only can we grow that revenue base more quickly than Solero can on its own, because we can cross sell with all these different products with all these different customers that we work with. But on top of that, we've got, a pretty lean mindset and great manufacturing capabilities, that we feel confident we can get gross margins into the 20-25% range, where this company couldn't do that on its own. So if they can deliver on that, then it's absolutely the right strategy, because you're buying at a discount and then kind of using your cross-selling capabilities and your manufacturing kind of prowess in order to improve overall profitability of the business that you're acquiring. So there's execution risk for sure, but I do think it's a good strategy that makes a lot of sense given kind of how sleepy and stale the industry has become.
Great answer.
Martin Muldoon says, question, how do we get to Robo-taxi? What are the steps? Who certifies L5? I'll toss that one to you first.
I think it's,
what do you think, Yashu?
I think it's the SAE or something.
SAE, yes, Society of Automotive Engineers, I think. Yeah.
Okay, there you go. Yes. So, what are the steps? Well, I think the first step is getting FSD wide released for everyone. I mean, you can make an argument, and I don't see this argument being made very often, is that, pardon me, is that Tesla could actually start closing off areas like Waymo kind of does this, where like they just won't operate on certain roads and they'll just detour around them if it's like they're giving them too many hiccups. So I think the next step maybe, and I know Elon doesn't want to do this, but it'd be interesting to see if they wanted to get online with the permission of a municipality, if they could work together in conjunction to do some sort of beta in a city. I think that's probably how we're going to see robotaxis first startup. I don't think it'll just be like, all right, it's solved, now go do your thing. I think they're gonna pick and choose probably a city that they're gonna be like, this is what we're gonna do. We're gonna make it, and we're gonna help the economy so much. Like, watch, we're gonna make this a case study. Where that be? I mean, who knows? Maybe Austin, that'd be pretty fitting. Miami, something like that. But level 5 is like no human interaction, like whatsoever. Like you don't need it for sticky situations. You don't need it for any circumstance whatsoever. I think we're still a ways from there. But Elon thinks it can get there pretty fast.
Yeah, I agree. Like, I don't think it's going to be the sort of thing where, like, the federal government or the Society of Automotive Engineers comes out and says Tesla has achieved level 5 like self-driving. I think it's going to be a lot more kind of like trial and error. Like maybe Las Vegas goes first with like the boring company tunnels. That would make a lot of sense. And then I agree with you. Maybe it rolls out to Austin or Miami. And I think you probably are going to have a safety driver for at least some period of time, just to kind of prove out the model. But I think eventually you're going to get to the point where Tesla can just prove, or at least some city will be willing to say, okay, you've operated so safely, within the last 6 months, you can remove the safety driver. Like that's kind of how I see it playing out. I do have. I don't mean to be a bear on this, but I do think that there's potentially a risk that the current hardware suite maybe can't get to quite level 5. So this is something that Chuck Cook has talked about, and even as impressed as he's been, with the latest 10.69, he still believes that they're going to need a new hardware setup where the side camera goes from the B pillar to more forward up on the vehicle, maybe in the headlight or maybe on the A pillar. So I think that kind of makes sense, and it wouldn't surprise me if on the next version of hardware 4, whenever we see that there's some movement in the camera placements, and so then maybe the existing fleet of cars, like maybe my car can never become a robo-taxi, but it still is like an amazing L4 system that I basically never have to overtake, but I might have to, like, every once in a while, if there's some sticky situation, I might have to, take control. So I don't know for sure if that's the way that it will pan out, but I do want to at least ascribe some probability to the potential that, like, maybe there's a difference between robo-taxi, hardware and then like really great ADAS, software that we have right now. So, all right, let's move on to the next one. American Yoshi says, question, what are your guys' thoughts on all the new battery tech improvements coming from competitors like BYD or CATL? Makes me think that 4680 might not be the leading tech by the time it's in volume production. What do you think, Yashu?
I think it's great. It's great that there's competition, and it's great that there's actually other battery makers, because the amount of batteries that Tesla will need is just like, it's just unlimited. So Do I think
Yeah.
4680 won't be the leading tech? I mean, if I had to bet between all those companies that you mentioned and Tesla, I'd bet on Tesla every time in the long haul.
Yeah.
Um, Now, the 4680s are going through some hiccups with volume production. It's nowhere near where they expect it to be by now. But again, I mean, good things take time. I wouldn't really put a date on it. I think, well, maybe I will. Spring of next year is kind of by then they have to start really hitting the ground running with some of the stuff where if they don't, I think production will be questionable at that point where like are
Yeah.
all the batteries going to come from. They do have backups, but just 4680 specifically speaking and stuff like Cybertruck that will need it and semis. So I can't speak to too much of the battery tech improvements specifically, but it's all about volume production. Whoever can hit volume production the most, Elon said, like, even with the battery tech we have right now, minus the 4680, like, we'll be fine. It's just about scalability.
Yeah. Yeah, like I agree with you. Like it may be that within a lab or within like a particular vehicle that like the production or the performance dynamics of one of the other cells out there might be better. But I think like look at Tesla's current portfolio. Like you've got like the nickel-based cells, which are the high performance, then you've got like the LFP cells, which are the kind of more economical ones. And it's not like I don't think you could say that one of those is better than the other. They're just optimized for different things. And with 4680, like sure, I guess it's possible that something else could leapfrog it in performance or some metric. But if you look at the way that they talked about that on Battery Day, performance was one piece of it, but way more important was like the manufacturing efficiency and like the capital cost per dollar spent. Or per kilowatt hour, the dollars per kilowatt hour factor. So like you got to balance all these different things, and like I don't think that something that BYD or CATL produces, like a lot of engineering is a trade-off. So like if you got like one of those pyramid diagrams, maybe they're better in these two factors over here, but they're worse in these two. And so I think you're gonna see a lot of different chemistries playing around with different optimizing, different performance metrics or different cost metrics, and that's a good thing because it gives you more options for providing different price points for your vehicles or different performance metrics that you want to get. So like I think 4680, when you look at it holistically and the performance that it provides, and most especially the cost, I think it's gonna be hard to beat it. But I'm all for competition, and like CATL, I think would be happy to sell to Tesla if if they really do have something that's better than 4680.
Yeah. And potentially we don't even get like dry battery electrodes. Like that's one
Yeah.
of the last pieces that they want to solve for that, would be great, like cherry on top. Like some people are saying, "Oh, you have to do it." Like you don't necessarily need it. And I think
Uh-huh.
it would be great if they can solve it, and I think they're aiming for it. But even without like DBE, I think the scalability factor with their new tech is just worth it. But forget about it. BYD cattle, great. Go make the best. Like the batteries that we'll need in the next 10 or 15 years are going to be just unlimited. So as long as you can
Yeah.
make as many as you can, like with the right form factors, like I don't think it matters too much.
Yeah, we are still in such the early innings of this overall transformation when you're trying to get to like the 10 terawatt hour scale in 10 years or so. We have such a
Yeah.
long ways to go. And I think it would almost be silly to assume that 4680 is like, the one silver bullet that we need, to get to this 10 terawatt hour per year future. Like, I just don't believe that. I think we're going to need many different chemistries, different form factors for stationary versus, vehicle. And I think that's a good thing.
Yeah.
So I'm kind of glad we don't have all our eggs in one basket.
Yeah.
Ooh, I haven't checked price. Martin just said Tesla just punched through 891. So
Yeah.
well done, Yashu, bringing the good juju.
There we go. Yeah. New high day. I like it.
All right, next question from Jupiter James. Post split, what's the downside of holding on to leaps when odd strike prices like $700 to 233.33? The Juju gang likes their options, and we're certainly fans of them here at Good Soil too. So, Yashi, why don't you share your thoughts on that?
What's the downside? Well, first of all, we're assuming that 700 turns into 233.33. If I recall correctly, the last Tesla split, there was some inefficiency with the strikes there, just rounding, rounding error stuff. I don't think there's necessarily a downside to odd strike prices unless I'm missing something. I don't think it really matters.
Yeah.
Maybe you lose a little bit with a rounding. Maybe they round to 50 cents or they round down to the whole number. Like, there could be little things like that. But I don't think I don't think there's any major downside to holding odd strike prices there. I don't think it matters.
No, I mean, I think the only thing would be you lose, 1 cent on that strike price, which, at times the
Yeah.
multiplier is $1 per contract.
Yeah.
So like that's not a big deal in my mind. I mean, I know I held the 690 strikes before the last split, and so those
Hmm.
I forget exactly how that rounded down, but it was not a big deal. You just get, back then it was 5 times as many contracts for
Yeah.
a fifth the strike price, and so it's not a risk. It's just the arithmetic of how it works. So I wouldn't
Yeah.
worry about that.
Yeah. I wouldn't worry about paying taxes to sell that to get into a better one. No.
No, definitely don't do that. All right, let's go on to the next question from JTV. How will Tesla implement charging for Robo-taxi? We've seen the snake charger, which looked wrong, let's be honest, but no current plans for superchargers to adapt. Retrofit seems expensive and time intensive.
Hmm. I think the easy answer to this would be you just have a like a Tesla employee at certain superchargers that all robo taxis go to when they're running low, and then you just manually have this guy run around and plug stuff in and just clean up cars. Like that's another one. Like who's going to clean up these cars if
Yeah.
people leave stuff everywhere? So I think you're going to need. I think Tesla bot chat comments are probably going to come in the chat right after I said that. But I think barring Tesla bot, I think you're going to probably need someone at these chargers anyways to clean up the car or whatever. Or to, if it smells like crap, I guess the bot would have to be able to smell like, there's certain things like that. So,
Yeah.
but JTV brings up a great question is like, before Tesla even considers they're close to a robotaxi fleet somewhere, they're going to start coming out with, adaptations to their supercharging network or different fleets. Like we're going to start seeing the signals of it before a robotaxi comes out.
Yeah.
And so, the snake charger, yes, you're right. It doesn't look great.
I don't think it's a great option either. Like I think there's probably like more capital efficient ways to do it rather than like putting a snake charger on. Like one of the ideas that I've thought about in the past was like maybe just offer like a 50-mile charging credit if somebody at the supercharger will just plug in your robo-taxi for you. Like I feel like there's like most Tesla customers are very good natured and love to chat with each other at the superchargers. I think a lot of people would be happy to do that just as a gesture of goodwill. But if you could incentivize it with $2 worth of charging or something like that, have the robotaxi operator pay for it. I think that would be a reasonable outcome as well. So like maybe that works, but I think ultimately it's going to be the responsibility of the robotaxi operator. So I think we're assuming here in this question that Tesla will operate some robotaxis, and I think that's fair. But like when I was looking at the economics of operating a robotaxi fleet, I thought it would probably make sense to have like a central hub that I would own, where you'd have somebody that would like clean the vehicles, like you said, would be responsible for plugging them in and cleaning the stuff out of them. And so I think there's going to be some overhead associated with this business, and this is going to be one of the things that needs to be considered for sure. One other option though is like Tesla bot. Like that's very reasonable to assume that could be out there. So maybe you've got a bot that's at 1 out of every 10 superchargers or something like that, and can handle some stuff like that. So I don't know. We'd be curious to see what happens, but it's a concern. But I think it's lower down on the priority list, I think. All right, Jason S asks, once FSD becomes fully functional, is it a good idea for Tesla to spin it off? I see opportunities in marketing it at different functional levels to different types of vehicles and other automakers. So when you say spin it off, I'm presuming you mean like license it to other manufacturers as opposed to like selling the business line. Yashu, what do you think?
Yeah, I think that's what Jason's asking is maybe like ADAS systems for this car because they don't have. I mean, that's kind of the beauty with the camera solution, vision only, is that to scale it, all you would really need is enough cameras around any car. And a lot of modern cars today will come up, and maybe it's not to the equivalent or the standardization that Tesla needs it for their input, but I reckon like going just standardizing that solution probably wouldn't be too hard. So licensing out, should FSD level 5, let's say, be solved, licensing that out, definitely a huge opportunity. I think what Jason's also asking is that at different functional levels. So, if the Honda Civic didn't want to make robo-taxis, but they just wanted to have a really sick ADAS system, licensing
Mhm.
just that portion of the code or whatever, how you divvy it out, I don't know. But, just doing that sort of stuff, and MacGyvering it perhaps. But I think a lot of the
McGavering, I like
legacy
it.
but I think a lot of the legacy auto manufacturers today would not today pay for Tesla to do anything, even if it was in their best interest.
Yeah, I agree. I think that's going to be the biggest roadblock, honestly, is just kind of politics and maybe the pride even of the other automakers. Like I don't think GM is going to give up on their cruise technology anytime soon because they're so convinced that they're like the leaders in the space, and similar to like Ford with their Blue Cruise or whatever it's called. I think they've spent so much time and they've got like internal teams that have built these products, and they're gonna like they don't want to lose their jobs, right? So if you have to abandon this technology, you're like firing a whole division, which Wall Street used to think was like your most profitable thing. Remember when GM was basically being valued for their holdings of Cruise at one point, like back in 2020? It's like I think that's kind of a mistake because like there's a very good chance that their technology just doesn't scale up, or at least has some local maximum, like Elon has spoken about, where just can't quite turn the corner towards autonomy. Like they admittedly they're pretty decent like ADAS systems, and that's frankly what Tesla is right now. It's a really good ADAS system, but Tesla has, in my mind, the very clear path to go from ADAS system to full autonomy, whereas these others don't. The other thing I wanted to add on to this was in that presentation that Ashok gave, he talked about how their occupancy network was kind of agnostic to the hardware configuration. So you could, in other words, you could move the cameras around to different locations, and you don't have to like rewrite the software or start training from scratch again.
That's so huge.
Which is like I'm just amazed by how smart these Tesla engineers are. Like that. That's just like my brain can't even wrap its head around wrap itself around like how you would do that. Like create software that's like I don't care like what configuration you give the cameras in. I'll just like recreate the 3D vector space no matter what, and we'll be able to handle anything. So they've got such a great generalized approach that I think there's a very good chance that eventually others are going to have to concede. But I think I don't know. I wouldn't want to bake that into my model because I just think that there's going to be a lot of some of these companies would rather go bankrupt than admit they built a product that's not going to work.
I mean, that's kind of the thing right there, is that Tesla is baking this pie that's supposed to feed, a wedding party of 100. Whereas a lot of the Waymo solutions and stuff, they're just baking a pie for themselves. Like it's different solutions it's a generalized solution. It's way harder. You're never really going to know when the pie is ready until it's out of the oven. Like it's a different solution for different things, but you're right. The ego that legacy auto can have towards new up and comers, especially Tesla, is just it's going to be their Achilles heel.
Yeah, it's a real problem. I mean, I spent some time working at GM. I've got a lot of friends that work for Ford or other automakers, and I think there's some misplaced pride in how like advanced they are in some of their features, and it's not setting itself up for like a peaceful ending. I don't think, which I worry about living in Michigan here. Let's do maybe one more question, and then we'll wrap it up. We're a little over the hour mark here. So Breakfast Pizza asks, how much do you expect Megapack Powerwall and corresponding VPP, which is virtual power plant, and auto bidder revenue to contribute to overall Tesla revenue in 2025 and onward? Kind of my wheelhouse, but Yashu, I'm curious, do you have thoughts?
I don't, in my model, at least right now. I think Tesla Energy, I just put it as a kind of a break even in my head for now, and not something that's going to contribute to meaningful earnings just yet. But 2025, but my cutoff is 2025 on that. So 2025 and onwards, I can't really speak to that, but I think you're the expert here. So let's hear what you have to say about Tesla Energy.
Yeah, I think I'm hopeful that we're kind of at the beginning of the S curve for the energy ramp. I mean, if you look at the historical like kilowatts deployed or megawatts and then megawatt hours deployed, it hasn't been this kind of perfect exponential like Elon showed at the shareholder day on the automotive side. It's just very clear that they haven't prioritized that part of the business. but we're getting to the point where you've got this dedicated 40 megawatt hour megapack facility, which is like, that's a huge deal. That's a huge amount of revenue potential coming off of that dedicated facility. So I think you're going to start to see some actual scaling in the top line growth there. What I think is more interesting, though, is when do they start moving the needle on gross margin, which I just kind of have given up hope, at least in the next 5 years. But then the Q2 came around and they surprised with, I forget what it was, positive like 7% gross margin, something like that. It had been negative. So it was like there wasn't any particular news as far as I could see that would have like some huge order or anything like that really drove the gross margin improvement, but it just kind of showed up. So I'm really hopeful that they're starting to figure out some of the kinks on how they can not only deploy a lot of hardware, which they're starting to do, I think, at a larger scale, but to do so profitably. I think Solar Roof has been way more difficult than they thought. And like based on Emmett's kind of anecdotal evidence, he had like a team of, I forget what it was, like a dozen people there for like 3 or 4 weeks. That even though he paid like an arm and a leg for that product, I'm sure that was a negative gross margin sale for Tesla. So they really need to get to the point where they're not only like manufacturing these things efficiently, which I think they're really starting to do with later iterations of the Solar Roof, but more importantly with this dedicated factory that's spitting out megapacks. I think like that's going to help a lot on the cost side for manufacturing, but then actually deploying them is like another part of the process. Like, so how quickly can your team like get in, deliver the product, and get out, or install the Solar Roof and get out? That's where I think they've been tripped up lately, because every location is different. You've got like site-specific instances, so you can't really fully automate that. So I don't know. I'm really curious to see how they can improve that going forward. VPP, I think I wouldn't put weight on that until like 2030 and beyond. Just by anecdote, there's this VPP in California that just last week had a great emergency. The customers were paid $2 per kilowatt hour, which is a lot of money.
Wow.
But Tesla doesn't take a cut of that, so it's not showing up in Tesla's financials. So I think they're trying to work out pilot programs. You've got to do that with every ISO and with each grid operator for those who aren't in the energy industry. You got to work with the local utilities in every single jurisdiction, and you're going to have different programs in different areas. And I think Tesla is probably more focused on trying to scale up those relationships and show that their VPP actually works. And I think they'll worry about monetizing that maybe 3, 4, 5 years down the road. Because right now, I think they really just want to try to get the scale instead of trying to squeeze like $2 million out of a very small pilot program, which won't even move the needle. I think it's just easier for them just to make the product work and worry about monetization on the back end.
I'm just imagining AI Day 2, there's like a trailer for it, and it's just Tesla bots on someone's roof, just installing all the solar stuff.
I would love that.
But to your point, I think Tesla... Oh, yeah, go ahead.
No, I was just going to say that's such an exciting future to think of like the benefits that would have. I mean, cost benefits for sure, but safety benefits. I mean, there's so many reasons why that would be an awesome future to get really excited about.
It's a great point about, and just ties back into the Robo-taxi. You were saying like, oh, Tesla doesn't, we're assuming that Tesla's going to run the entire network, but there could just be private companies that run it for profit. I think maybe you're right in that sense, because I never really I thought Tesla wanted to own the entire experience front to back of the Robo-taxi and then make some sort of service revenue money or membership level money from people opting in the fleet. But I think maybe their experience with Tesla Solar shows them boots on the ground everywhere is tough. Third parties are probably better to just outsource this to, rather than just try to do it internally in-house. So maybe they take those learnings over to Robo-taxis as well. Yeah,
it'd be very exciting to see. Well, Yashu, thanks so much for coming on and being a guest. We're sitting here at 893, 892.50 at the moment, so you definitely brought the good juju today. We got to have you on next time that the stock's languishing for a little bit. We'll just have you on as the guest host.
I appreciate you having me on. Thanks, everyone, for tuning in.
Yeah, thanks for watching, everyone, and we'll see you next week. Emmett will be back, and same time, same place.
Yes, Emmett will untan himself, and he'll be back.
He'll untan himself. Thanks, Farzad, for that.